Hello everyone, welcome to Xylosar, new weekly market update with us, and let's check what's happening in the market and especially in the gold market and the Euro USD market. As we know, the gold market is dropping to the downside day by day. But next week, let's see what will happen.
Indeed, as Nurhan has mentioned, gold has been dropping massively as uncertainty is reducing the market because China has announced they're not really dropping another bomb when it comes to tariff wars. Okay, this actually is causing financial markets to flourish. We got a huge jump in NASDAQ, very impressive. Also a huge jump in Nifty50 going to the Indian market, and also Bitcoin is showing some pretty amazing patterns and beautiful breakouts. So let's dig into it.
Eventually, Donald Trump tariffs appeared on the earnings of the Apple. They announced they will expect to lose by $10 billion for the second quarter of 2025 from their earnings. And by the way, at the beginning of the week, ADP pumped fear in the financial markets, but NFP raised it. Let's have a look.
Hello everyone, welcome back to another weekly market updates. My name is Sam Arslan. I'm a senior technical analyst at the Institute, and here we are to kick it off as usual with NASDAQ or US 100. So post tariff war pause that has given a lot of investors and big market participants that the situation financial market is finally reducing the stresses of all these uncertainties. And we can see actually US 100 flourishing with a beautiful breakout to the upside. And we can see that after a beautiful breakout to the trend line of the previous downtrend, we can see that markets actually retraced to the support level of 19,000 and carried on to the upside with a very beautiful impulsive movement to the outside. Now, from here, we're actually very close to the resistance. So we might see a slight continuation for the market to retest resistance of 20,400s. Or 300s, and then we can see a retracement. Now, after all these strong bullish momentum and retracements, we are not really, the probabilities are that NASDAQ is not really going to retest to the level of 18,800s. So we might see it going down to somewhere about 19,500s or in this range probably before a retest or another attempt to break the resistance of 20,400s. And this actually is a very good indication here, as we can see in the box I'm working on highlighting. So we can see that the price of 16,000 was very discounted the 7th of April. And this actually, guys, is a part of market cycle, how economy has to recycle every other time. And the reason for that is all these big investors, market participants, they never really want to buy prices premium, right? So something has to happen in order to flush liquidity into the markets, and 16,400 was actually a very good and impressive price for market participants to jump in as a discounted price. And technically we can clearly see that here represented in this very beautiful big candle. So after markets tried to push the price down, we got this huge impulsive candle, and these two candles here are actually very direct and huge good representation and to give us that understanding that markets are actually prepared and ready and fueled to break above the trend line to the upside. So this is the most probable scenario, some retracements before another attempt to break resistance. So nevertheless, Nifty or the Indian market, Nifty50, has also performed pretty nicely in coordination with the tariff results or the tariff situation or status or the point it has reached. You guys get the point. All right, so as we anticipated, it was at the upper trend line of this descending channel. We got a beautiful flush to the downside, which liquidated this low. However, as we have pointed out, the support appeared to be very strong since a while. And from here, we see a very impulsive, aggressive momentum to the upside, touching the resistance of 24,600 or 500s actually, better say. So from here, we can see a retracement that one of these situations could retrace to the support or trend line, but in most cases, due to this, another reason to it is this candle here and the narrowing wedge to the upside, we should see some retracement to the downside, and this can be till the support of 23,700, trying to fill this gap perhaps, or might just go to this before another attempt to retest the resistance of 24,800s. So going to Bitcoin also never failed us to go up with what's happening with the markets globally, and we can see a very beautiful breakout, and we already saw that actually. But after this beautiful breakout, Bitcoin has continued a very strong, in comparison with the other two assets when it came to indices. Yes, the momentum there were pretty much way more impressive. However, you guys are all aware of Bitcoin, and it's more of gold when it comes to, you only want to look to buy when it comes to long term, and also other indices. But the point is, after the break, we can see that although market created an ascending triangle, however, it has not reached to the apex resistance in this momentum. So it would have been good to actually go for a sell position from here, especially that we have multiple candles such as the one here, here, and here to give indications that the markets will actually keep pushing forward to reach the resistance. Now, this is a lot of momentum. Similar to the US 100, we can see another expansion a little bit to 99,000s before a retracement, and the retracements most likely, if it happens on aggressive pull, it should go up to 90,000, 89,000, and so on before another attempt to break the resistance of 98,000 or 99. So this will be it for these three assets for the upcoming week.
So guys, let's check together the EURUSD and the gold market, and we'll start with the gold market. As we can see, the gold is trading at the bearish side of the market cycle and is between a resistance and support from here. We have a basic trend line, or let's say he's broken the trend line from here and is trying to retest again to our trend line, and he has this breakout support from here. He needs to test it again because he has some, let's say, buy side liquidity from here. He needs to jump to it and liquidate it. Again, what we can expect on the Euro USD, guys, Euro USD is consolidating a narrow zone which may break this resistance, okay, because we are in the support now, and it's like our outlook, it's in the up channel with the resistance. So we can expect the market to come till this resistance and fell down again, and it's okay for.
Greeting everyone, I'm Amidian here. I'm Senior Fundamental Analyst and Head of Traders at the Xylos head office in Dubai. Last week was a volatile week. We got the variety of economic indicators and geopolitical news. I want to kick it with the employment sector in the United States. Last week, ADP, which is tracking the employment in the private sector, it released massively lower than expected. Employment increased by only 62,000 jobs in April. Annual pay was up by 4.5%. Nella Richardson, chief economist at ADP, she pointed out to unease in the word of the day. Employers are trying to reconcile policy and consumer uncertainty with a run of mostly positive economic data. It can be difficult to make hiring decisions in such an environment. Later, we got the GDP. It was the first time since 2022 GDP dropped by 0.3%. It brought back the recession fears in the US. The price subcategory of this economic indicator at the same time increased, and it raised the probability of stagflation among the market participants. The price index for gross domestic purchase increased by 3.4% in the first quarter, compared with an increase of 2.2% in the fourth quarter of 2024. The personal consumption expenditures, or PCE price index, it's a subcategory of the GDP, increased by 3.6% compared with an increase of 2.4%. So as mentioned earlier, it decreased the risk appetite of the financial markets, and equities and crypto market faced a pressure. In the continuation, we got the PCE also last week, which wiped the fears among the investors by lower than expected numbers. In March, the US PCE price index was flat month over month, and it just rose by 2.3% year over year. Core PCE, excluding food and energy, also showed a minimal monthly change, increasing by 2.6% from a year earlier. US jobless claims was the next one, which rose to 241,000, the highest in the last 2 months, signaling a cooling labor market. Eventually, non-farm payrolls on Friday again deaccelerated the fears by the steady number for unemployment rate, better than expected numbers, which was 177,000, and at the same time higher weekly hour working. Just for the information, when we are in recession, the working hours will drop, but it didn't happen in the US for the last period, which means we are not in recession, and it entirely increased the risk appetite. The next one is Bank of Japan. Bank of Japan monetary policy meeting was held also last week. We got a dovish speech and a statement by the chairman, and it caused the USD yen to drop dramatically. About the corporate earnings, Apple beat earnings, but the stock fell. Vague tariffs outlook, weaker China services data, and a 10 billion buyback trim raised concerns. Amazon was the next one, which already missed the revenue growth and forecast operating incomes. And the next one was about the ExxonMobil. Earning was better than expected due to the higher production rate from Guyana, and it helped to boost the earnings. And eventually the CVX or Chevron, although earning met the expectations, company saw a turnaround in its refining business from a loss last year. From the geopolitical side, we got closer for a final deal about the US tariffs and was an up point for the financial markets last week. Let's jump into the next, or let's say upcoming week. The Federal Reserve monetary policy meeting and Bank of England, or better to say BOE monetary policy statement, will be at the center of attention. And regarding to the earnings next week, we are gonna get the earnings from some giant companies such as Ford, AMD, Rivian, Uber, Walt Disney, Coinbase, Shopify, and Marathon. So stay tuned with Xylostar, and don't forget, if you want to increase your win rate in the financial markets, you should always care about fundamental corporate earnings and geopolitical events, plus the economic indicators. Stay tuned. See you next week.
Thanks guys for watching us. Don't forget to subscribe, put likes and comment.